simply due to the fact that it allows for decentralized structures, and at the same time, it allows also for opportunities to protect against manipulation, because this is the biggest threat and the biggest risk of transactions in the carbon space. So de facto, blockchain offers, from a technology perspective, a high degree of protection against the manipulation of some people that would like to utilize it for their own profits. And unfortunately, these type of manipulations then also kill the reputation. They kill also the further willingness to engage into further developments of the blockchain. So I think with Michael, we have a great guy here who can explain it to us all to see what has been done in Europe, what could be maybe usually of value here for this region. And as I said earlier, he has a degree in informatics, but also in economics, I believe. But with that combined, Michael is one of the two partners that are directors of PONTON Consulting, which is a company based in Hamburg, in North Germany, and that has become, in reality, instrumental for developing industry solutions. The most important industry solution has been the development of EFETNet, as it was called 20 years ago, peer-to-peer matching of transactions. At the time, not at all sustainable, meaning wholesale transactions, electricity and gas, then later on in carbon, and today also in other commodities. And then 10 years ago, roughly, also the development of a reporting service that was developed in order to address the reporting and transparency regulation of the European Commission that affects the wholesale energy trade in Europe. Today, the technology that Michael developed is, I don't want to use the word dominant, but they are actually most of the transactions in Europe, meaning billions of trades, value are transacted over that software every day. It has never failed, and it is fully trusted. So PONTON Consulting and also Michael and his partner, Tilo Zimmermann, who is not here today, who are also trusted partners of the various authorities that are engaging in the commodity space. And having said all of that, I think the floor is yours. Thank you for coming.
Thank you, Jan. Thank you for the invitation. Thank you for being here at Siemens and at the Khalifa University. And it's a pleasure for me because people like Paul have also given keynote speeches at our conferences. And so it's indeed a pleasure for me also to visit Abu Dhabi, Dubai, to do my contribution to the community. And yeah, what I'm going to talk about is my journey of life, if you like, as far as blockchain is concerned, the projects that we did, and what I want to share is the experience with that, the good, the bad, the ugly, and I hope that this can help to learn and to judge which processes make sense to be blockchainified and which not. And this journey is well, it's long actually. As you will see, it started in '96 until now, and it was full of surprises and full of interesting discoveries. And what I will do now is I will go step by step chronologically through what I did in these what is it, 29 years actually, and speak about that project by project. And if it gets too long, I will skip some projects. But if you want to hear it, I can easily also go deeper into details, or we table that and have a discussion after the presentation. So I'm completely flexible here. And in that sense, thank you, Jan, for the nice introduction. That helped me to skip the introduction myself. So a little bit about myself. Indeed, I'm into crypto since 1996. And the magic behind this is there was already a cryptocurrency called eCash. Yeah. And I could talk a lot about that, but I'm skipping that. But this is when it all started, and eCash failed. And because eCash failed, I was a bit desperate because I liked it a lot. It somehow met my personal mentality of digitalization in that sense. But it failed. And when I then heard about Bitcoin in the year 2011, by the way, the person who informed me about Bitcoin was Jan van Aken, who knew it from Bart Peke. And in those days, one Bitcoin was worth €2 a piece. Yeah. So I was fascinated, and I read the Satoshi white paper, and I could read in every line, yes, that's it. That's what the world was waiting for, and that is what failed in 1996. So I was somehow excited and enthusiastic, and I bought 50 Bitcoins in those days in 2012, but I gave them away in 2013 because I did a project with some colleagues. We wanted to build an online slot machine where you pay in Bitcoin, and we had that developed by an Indian software developer, and he asked for 2,500 euros, and in 2013 the price per Bitcoin was 50. So 50 times 50, 2,500. I told the other two, I will pay this guy Bitcoin, and you do the rest of the work. Yeah? So go on. Anyway, and then this period, 2014 to until 2016, all these highly marketing-heavy activities started. Yeah, all these ICOs, all these altcoins. And I was really annoyed by that. I'm the engineering guy. Yeah? I was so annoyed by that, and I asked myself, isn't there anything that we can do? We being PONTON, my company, and we being the community around us, our clients, specifically from the energy trading side, which really works. Yeah? And I will tell you later about that. This is the EnerChain project mainly. And I was so fascinated about all this that I even wrote a book on that in 2017, and did a lot of projects around blockchain. But then there was a point in time around 2020 where I was a bit exhausted and said, okay, so this is not always gold which shines. And I turned from a blockchain Paulus into a blockchain Saulus. Yeah, so I was the con man overnight, and or a Bitcoin hitman, as you may call it, because I did consulting activities and I advised companies if they should participate in the blockchain projects or not. And the hit ratio, I would say, was 99%, because I knew exactly which questions to ask and how to decompose the projects and how to put the finger in the painful point where problems are not really addressed and solved. So I did some of these gigs, and yeah, that's it actually. Let me proceed. This is a little bit about PONTON, my company. We are a software company. We sit in Hamburg in Germany, 70 colleagues. We have a focus on the energy sector. This is on the market side, post-deal settlement, be it on the OTC side or on the exchange side. Jan described already what we did on the OTC side, and if we look at the exchange side, we have developed, for example, the settlement system for the EEX group, for ECC, the clearinghouse of EEX group, which does the spot market settlement. So, and then on the grid side, on the physical side, so the engineers are on the left side, and the market people, of course, on the right side. And usually they don't talk to each other, and it's a kind of privilege if you do business with both of them, because you understand why the engineer on the left side doesn't understand the market people, and vice versa. Yeah. And on the grid side, The hot topic is flexibility. The hot topic was already flexibility about 10 years ago, but it still is. And for the next 20 years, it will be a hot topic. And here, for example, we do Redispatch 2.0. We are the developers for ZETA, developing the DARE platform, which is a centralized platform, sorry, but they wanted, at the very beginning, it should have been a decentralized blockchain project, but I said that doesn't make sense for this use case, yeah? So we developed that in a classical way. And also for in Austria, we have a lot of clients from the grid side who use our software for energy data exchange. I don't want to expand on all those things that we do, which represent 90% of our business. I now focus on the non-90% over the past 10 years, let's say. And that is, among others, around blockchain. So let me start. I think I skipped this. It's anyway chronologically. And I will very quickly go through this because this is from 96, the eCash experience. And I found this on the eCash website. These were the participants. And look at these beautiful maps. Yeah, so this is so 90s as far as the internet is concerned. And I was research assistant working on my PhD in those days. And that was us. That was us. We built an exchange, yeah, based on eCash, and there was no link between the eCash world. It was completely isolated. There was no link between that and the fiat money world. So everyone who installed the eCash wallet had 100 cyberbucks for free and could do something with that. And this applied to about 30,000 people participating in this field test. So there was a interesting. We are the rooms in weather, so they're always too close. That's fun. Yeah. So there was no link between the digital currency and the outside world. So it was like being in a prison cell, and you had to do something useful with the money in the prison cell, where there are no goods you can really buy. Yeah? And then people started becoming creative. So some became online beggars. So they just asked for money and gave nothing. Yeah? Or others, they draw some nice pictures as a bitmap in return for the cyberbucks that you sent to them. What we did, we created an exchange. We simulated the 30 DAX values of the German stock index, and we divided them by 100 so that they were affordable for the owners of eCash. And then we started selling as a central exchange. We started selling the stocks to the participants, and they bought it. We had 2,500 participants in our stock exchange. And so we got a lot of money into our wallet. And then, of course, others sold, so maybe even for a higher price. So that was, again, then paid out of our hot wallet, if you like. And that worked. And people liked it because that was the first real application in this eCash system. But eCash failed. eCash failed for several reasons, but one reason was it was centralized. There was a kind of central bank, the so-called MID server, and the MID server was used to sign, and I don't want to go too far into these processes. There was a central, I call it now here a central eCash bank. It was used to sign the blinded coins, and as a central point of failure and a central point of control, if you shoot down that central point, then the whole system breaks down. What the Deutsche Bank wanted to do is to use eCash as a currency in Germany. Yeah, and they announced that to the Bundesbank, to the German central bank, and said, "Look, what great thing we have applied here, based on eCash. This is a true currency, and we invite our people to use it. And this is digitalization." Yeah, and then maybe 3 weeks later, they received a letter from the Bundesbank with one word, no, this is not going to work. There's only one legal tender. This is us, and this is the Deutsche Mark in those days. So it didn't work because it could be shot down by the Bundesbank. And that was very painful for the not blockchain, but for the cyber currency community. And then a long cyber winter, if you like, began, which lasted until 2009, until the 3rd January of 2009, when Bitcoin was started. Yeah, right after, well, in the middle actually of the financial crisis, and because of the financial crisis possibly. So and as I said, 2011, I learned about Bitcoin, and I attended a conference in 2012 in London, and that conference was cool. That was full of crypto anarchos. Yeah, can you imagine? If you go to a Bitcoin conference, you have elegant marketing people running around there. At that conference, there were the young guys wearing masks. And that was not because of Corona, because they didn't want to be identified. Yeah, so true crypto anarchists. And I gave a presentation there, and I gave a presentation on using Bitcoin to handle EUAs, yeah, European allowances for CO2 emissions. And no one really understood what I was talking about on the conference. But the idea was that the way how Bitcoin works is not bad as a framework to manage EUAs. And if you look at EUAs, they represent a ton of CO2 emission, and they can be transferred. They are first created by the Commission, then they are distributed to the industry who emits CO2. Based on the expected volume of emission for the coming year. Then it's distributed, then it can be traded, it can be transferred forward and back between these participants. And towards the end of the year, they are retired again. And then the Commission checks if the allocation of EUA certificates meets the actual physical production of CO2. And if that matches, everything is fine. If there is more produced than certificates are available, then some fines have to pay, and vice versa. So if you look at Bitcoin, the Bitcoin addresses are more or less comparable to the participants in the EUA market. And the airdropping of EUAs would be an initial distribution across these addresses. So that would be the Commission having one address with the entire volume per year of production of CO2, transferring the allowances, the volumes to the different participants. And then the transaction mechanism of Bitcoin, which is UTXO based, which means that if I have 1,000 certificates and I I want to transfer 10 of them to Paul, then the transaction goes as follows. There is a transfer of 10 to Paul, and 900 of that goes back to my address. Yeah, that's the unused transaction part of the transfer. And at the end of the year, this Bitcoin setup stops, so excess is prohibited. And the allocation that you then see on the blockchain is exactly the final allocation that can be processed by the Commission to do the next steps. And then everything will restart again with a new environment in the next year. So this is what I presented. And no one understood what I meant. Can you imagine? There were these guys wearing masks, the crypto guys. What? EUA? And then, I mean, in those years, in the 2005 to 2008, that was the hot phase of EUAs in the energy trading world. Yeah, there were huge conferences. There was a McKinsey consultant coming from Washington to Europe because Obama was to be elected, and they expected that the EU mechanism, the cap and trade mechanism, would be introduced also in the USA. So it was a worldwide hype around EUAs, and no one knew about Bitcoin. Yeah, so no idea. So it was, but it was fun to be in the middle again, but it didn't work. Anyway, next one. Okay, the solution was then finally to have a central EUA registry, which has been developed already before by the Commission. So now comes what Jan already mentioned, the EnerChain project, and that was actually the biggest thing we did in this blockchain space. And why did we do that? Because the traders claimed that trading is too expensive. Yeah. So there are the brokers who ask for broker fees. There are exchanges asking for exchange fees. There are clearing houses asking for clearing fees. And if you put that all together, if you have a churn rate of 15, then this all stacks up and reaches a volume which is felt as painful and obsolete. Yeah. Why should we get rid of the broker fee? That was the slogan in those days when we started the EnerChain project. And because we asked the traders, what do you want to do with blockchain? Yeah, we had first some education sessions, and then we asked the people, where do you see the most useful application of blockchain? So get rid of the broker fees. And the result is these nodes in the middle. There is no broker left. There is no exchange left. Everything is distributed, decentralized, if you like, and therefore there is no one in the middle who asks for money, yeah, and for a fee. The nodes would be hosted by the participants themselves, and that framework would be the infrastructure which executes trades in a decentralized way, so that there is a shared nothing, if you like, in the middle. And the trading organizations around, they have a screen on this looks like the Joule screen, which traders know from Trayport. So we built something which a Joule lookalike, if you like, and could also be trading robots involved. And if someone puts an order on the blockchain, it takes one block time until this order is visible for all the others, because the order needs to be validated. This is a process which runs when the validation takes place for each block. And we use an extremely fast blockchain in terms of block time. We use Tendermint, and Tendermint allowed for block times of 1 second. Yeah, you know, Bitcoin requires 10 minutes on average, until the block is finalized. Ethereum requires 20 seconds, which sounds fast already. Tendermint does all this within 1 second. So you put an order on the chain, it is distributed, and then after a second, Jan, yes?
I was just wondering, all these companies that are on that slide, they're obviously large companies in Europe. How were they at the time thinking about Bitcoin to be a means of settlement amongst each other? Do you still remember whether there were any reservations to the use of blockchain after Bitcoin's potential Bitcoins? Was that ever discussed in that project?
Yeah, these are two different aspects. One is the operational process of executing trades, which was decentralized, and for the using Bitcoin for the settlement was probably in those days doable, because the mining fees were probably quite moderate in 2016-17. So I would guess that if I remember right, or I think that the price for Bitcoin was maybe at €1,000 per Bitcoin. But I would say that the mining fee was already too high as a transaction cost. Yeah. So if they complain about the brokers, the mining fee would have been even higher.
So would you then say, obviously 10 years on, today Bitcoin would be out of the picture in terms of settlement?
Definitely.
I just heard, by the way, yesterday that in Dubai, most of the real estate that's changing hands is transacted on Bitcoins.
Yeah, but these are two different things. So if you look at this scenario here, where the prices could also be quite small, the transaction volume would be small, and still, relatively speaking, the mining fee would be high in percentage-wise. If you buy a property in Dubai and pay 5 million for that, you pay maybe 100 euro for the transaction fee, and that diminishes, or even if it is 1 million. Yeah, so this is it. Bitcoin is a store of value. It makes sense to use it like gold, and you could also take a 20 kilo of gold and put it on the table against the apartment in Dubai. So that would be a comparable way of trading. Yeah, but if it is a very repetitive transaction system, Bitcoin is not really efficient for that, and it was not built for that. And people started adding on Bitcoin using lightweight payment mechanisms, but they more or less also failed. It's very complicated to implement that and to get that into action. So back to the EnerChain project, we implemented this. The transaction was executed in a decentralized way. It was live. We had several public demonstrations of live trades, and the funny thing is, whatever was executed here on EnerChain was then reported as a transaction to ASA. Yeah, to the regulator, because there's an obligation to report such trades. And those trades were reported through the ERR system of Equias, our client, which Jan mentioned at the beginning. And so we could follow that these transactions which have been done here were truly reported to the regulator and were therefore live transactions. And by the way, shows there were also a lot of transactions done bilaterally between traders. So it was within limits, but it was used for live trading within this group of participants. And as you can see, the group of participants, this is the crème de la crème of the European energy sector. Mainly really the large utilities from the different European countries. Also some smaller, younger, innovative trading organizations, and that was a cool time because we were, I think, really the only ones who did live transactions, and probably not only in Europe, because you need to know the sector, you need to know the application. And at the same time, you need to know the technology and bring that together in the right way to do that. However, everything nice, but you may ask, where is EnerChain today? No, EnerChain doesn't exist anymore. And that has some reasons, because even EnerChain failed. Yeah? And why did it fail? And it has a lot of reasons. And each of these reasons would be enough to let it fail. And let me share that. So, first of all, there's a business reason why it failed, because practically speaking, we during EnerChain or after EnerChain, we would have to found a startup with a financing that we came to the conclusion that something like 40 million euro would have been required. Mainly to incentivize the market makers to move from other platforms to this platform. Because we live in a network economy here, and there were existing centralized platforms who had the market liquidity, and we had to move the market liquidity to our platform. Otherwise, the existing platforms would have been too sticky. And half only of these 40 million euros would have been necessary to incentivize the large players to do their transactions on energy. We didn't do that, so that is already a reason why it was not continued. Next one, this idea, this slogan or this vision, get rid of the broker fees or exchange fees, it was not actually applicable because in euros, it might have been tens of thousands of euros, what large trading organizations pay to the brokers and to the exchanges on a daily basis. But in relation to the traded volume, this diminishes. This is a promille. It doesn't hurt after all. Yeah? So that argument or that point was not really true. And then there was a bunch of technical issues. Even with the 1 second block time, the technology was too slow. Because if you want to do a transaction in a decentralized way, this is a multi-step process. It would have required 2 or 3 blocks to be finalized by individual consensus. And this is far too slow. If you look at ePIC Spot, which sits on top of the Deutsche Börse execution system, we speak about microseconds. We speak about high-speed processing here. And 2 seconds, a guy from Deutsche Börse told me once, for us, 2 seconds is like a year. Yeah? So many things happen in that time span. So too slow. Maybe some commodities, some less liquid commodities could be traded this way, but people rather look at the painful parts of the system and less at the opportunities of the system. So for let's say mainstream applications, this is too slow. And then a typical thing, we decentralized the execution of trades. But what does it help if you believe in blockchain as a means to decentralize if there's another process required which cannot be decentralized? And that process was the credit limit mechanism, which is easy if you have a centralized system. You tell the system, let's say ePIC Spot, I don't want to trade with the PONTON anymore. Yeah. So please ensure that all my traders don't see any buy orders that he puts on the order. So this goes to ePIC Spot. ePIC Spot applies that. It's not in real time, but it could be. And then no one can trade anymore. It's totally easy because it's managed by the exchange sitting in the middle. If you want to decentralize that, and I spare out now the true complexity of this, is really difficult. We solve this, it's solvable by applying public key cryptography in a double way, but it doesn't scale. If you have a large number of participants and a large number of orders in the system, it horribly slows down, and it's practically not useful anymore. And then we fell into the trap. So many other startups in the blockchain space also fell. And that trap is, there is some magic technology being developed by some geeky Ethereum developers, and it will only take another year, and then this is available, and then everything is milk and honey. And our version of that was, there is, for example, there is something like homomorphic encryption, whatever that is. Homomorphic encryption is the hot topic in crypto research, and it will take only a few years, and then things can be executed in an encrypted way, and all our problems are gone. No,
it's too magic. It doesn't work. Yeah? Or another solution. We built a centralized tool to bridge the time until something decentralized works better. And that is also believing that this is going to be a good approach, but it is de facto a centralized solution, and you never get rid of that anymore. Look at IOTA, which is another decentralized approach, who introduced the coordinator, which is also some kind of ramp-up tool in order to increase the decentralized use of the system. And I'm not sure, but I think it still exists after I don't know, 8 years now. So typical trap. And then also we should consider the social perspective on this. We live in a culture where trusted third parties exist. We use them. Could be notaries, could be banks, could be the state, could be some other roles in business. And that works. And of course they could cheat. And there are notaries who cheat. But as a society, we have sanctioning mechanisms which help us sanction that. And after all, if you look at the overall balance of the give and take, it works. It has some losses, but all in all, it's a working system. If we don't have these preconditions in areas of the world where this is not given, blockchain makes more sense. So I'm convinced about that. But when we speak about the projects that we did, clearly trusted third parties make sense. And so the most important rule, if you want to evaluate a business idea, first check, is there any trusted third party around? For example, like a transmission system operator or a distribution system operator, or even the state or whoever, who could be used to organize a process. And if that applies, forget blockchain. Very easy. So blockchain only makes sense in the absence of any trust and trusted third party.
Can I reflect on that? Because it's, yeah, thanks. I mean, from, let's say, a social functionality point of view, I get it, but isn't it also just, way more efficient if you just cut out the notary public? I mean, the function of a notary public, of course, there has to be trust. But in addition to the trust, it's also something that if you automate it, it's just easier and quicker and less costly.
Yes, that is true, that makes sense, but that is more case-by-case consideration, similar to the exchanges and the brokers, and they get rid of the broker fee idea. So this would be get rid of the notary fee idea, yeah? And in case of notaries, I would agree, yeah? So they are expensive, and maybe that makes sense. But it could also be done, I mean, at that point in time where you also legally are allowed to deviate from a notary and use a different system, it could still be a centralized system. So there could be a super notary doing a digitalized automated process, which still would be the more efficient solution than a decentralized solution. Decentralized solutions are always less efficient than centralized solutions. That's because of the complexity of decentralized processes. So it is a case-by-case consideration, I would say. Yeah? So all in all,
maybe Michael, is there nothing new that came after blockchain that would be more efficient in terms of time that is consumed or in terms of energy that is consumed for enabling such a decentralized structure? I mean, I'm asking it for a reason. Obviously, this region here needs to embark on some sort of regional carbon market one day. Otherwise, if none of the countries here will hit the carbon targets which they themselves committed themselves to. So they themselves are too small in order to have a carbon market. So in reality, they would need to have a decentralized solution where they could just basically all use without any centralized role of a authority because there is just no European Union that could take on this role unless the GCCA would be interested in it as the only possible broker here.
Yeah.
But is there anything that could be more efficient? Because you said ultimately that Enerchain also failed because of technical reasons, if I get it right. Is there anything that has been developed since?
Very principally speaking, I don't think so. But as you mentioned, if there is no superordinated trusted third party in a region or worldwide, then this is still a biotope where blockchain makes sense. So I don't want to say with this that blockchain doesn't make sense in general. Yeah. And as I said, it depends a bit on the region. It depends a bit on the structure of authorities and trusted third parties. And for the use of CO2 registries in the region here, for example, it could make sense. But as I said, I would approach it in such a way that I look at the business requirements, somehow derive the business process out of that, what's really needed, and then look at the technology and see how the technology can be applied and which technology will be applied. And I don't want to exclude that blockchain makes sense. I would be the most happy guy if we finally find a blockchain setup or a use case there. So because I was talking so many years about that, still I'm hoping, and I didn't give up that hope.
Talking about it right now. I think you're quite right. Blockchain can never be an overall purpose. It is the mean only. It's a part of a solution. And about the question of centralized, decentralized, we see this in the whole society worldwide. It's always both possible.
Yeah.
And it is, like you say, I think it's the most important thing. Look at the applications, at the clients, at the process, the one that have to see a benefit. And the benefit is not only about efficiency, by the way. There are more objectives than only efficiency. The security, for instance, integrity, the standardization, the global application, things like that. So, like I said, blockchain is never a purpose, the overall universal purpose. It's always a mean in processes. And also the most important thing, the lesson here is in Enerchain. At the beginning, you always fail with new solutions in complex environments, and you have to learn. This is a learning process, and now we want to hear all the learnings to know, like, where do we stand today? What are the possibilities today? What are the technologies that we have today? And with the learnings that you have, what do you see? Do you believe that there is now a better way of solving these applications?
Yeah. So, thank you. So Enerchain is not the last project that I'm presenting here, and don't worry, I will come to positive examples. Yeah. So, let me continue. So here we have a biogas scenario, by the way, and here it could make sense to use blockchain. However, this is also 8 years old. At the point why this project failed is that company failed. They went insolvent, and I still have an open receivable of 12,000 euro against them. They were the Swiss biogas register, like DENA in Germany and Energinet in Denmark. So what is the idea here? The idea is we have biogas producers on the one side, and we have gas consumers on the other side. This is a mass balancing system. So they have their input of, let's say, 1,000 tons of biogas, and they consume gas. And independently, if this is biogas or not, physically speaking, maybe some molecules get from there to there, but that's not the important point. And then we have biogas registers. So there's one in Denmark, for example, there's one in Germany, And the entry of the gas into the system is booked, and also the consumption is by consuming, this is booked out of the system, and then transfers may take place. And behind these transfers are trading processes. Yeah, so it's traded from A to B and from B to C, and C is then the final guy who sells it to the industry here on the right side. And in principle, this is a centralized system. If we look at the individual countries, yeah, so DENA in Germany is the operator of the biogas register registry. And this is fine, and this works, and we have a closed shop, so to say, doing the mass balancing. The problem comes in if we go cross-border, because there's no connection between the registers across the borders, meaning there is room for double accounting or double spending, and this cannot be detected. So the trader B may sell it to C and to D and to E, the same quantity, yeah, illegally. And what we need is a super coordinated kind of registry, which keeps track of the output from the German registry and combines that and syncs that with the input into the Danish registry. It could be done in a super coordinated way, but these guys are little kingdoms. There is the DENA kingdom, there is the Danish kingdom, and there is the Swiss and the Austrian and the French and the whatever Belgian kingdom. And they don't want this guy on top. They don't want centralization. So decentralization makes sense here because centralization is just not wanted. Yeah, that was the precondition for this project. And what we did was we built the mass balancing system as a blockchain, which is shared, and a node was run by each of these decentralized registries, and they just did the booking through the blockchain, or could have done, of course. They went insolvent, so it was not really implemented. But it was a use case where I would say, there it makes sense. There we have a decentralization by political interest. Please.
Thank you. This is a very interesting use case. I was just saying to Jan that this is the typical problem in every single carbon-related product, whether it's biogas, and this is the potential of double counting, typical book and claim issue. But the failure was purely, it wasn't technical in this case, it was more financial related.
Yeah, they were just not responsive from a certain point in time, or they just failed with their business as a register, as a company. They went insolvent. Their financing was not continuing. And of course, what we could have done is to approach DENA and the other registries and to try to bring them together and to try to push this project ahead. But I must say that was a parallel project to Enerchain, and we put most of our resources into Enerchain and less on this one. And as long as no one paid us for this, we had also not such a big interest in doing this proactively. But I mean the design is still there, the experience is still there. So if there's any interest in doing something like that, I see something here which absolutely makes sense to be decentralized.
I agree. I mean, you look at SAF now, SAF is being traded through a book and claim system with these new registries recently. That's sustainable aviation fuel. Sustainable aviation fuel.
Oh, I will come back to that. We do a project with that. I will show you.
Okay, great.
SAF, yes, of course. It will be the second last. So let's treat this as a cliffhanger now. In 15 minutes. So that here I would say blockchain candidate, yes, green check mark. Yeah. So this looks good, but unfortunately wrong circumstances. Oh yes, by the way, minting and burning. Yeah. So this is the life cycle of tokens. There are different ways how to connect that to blockchain. Yeah, that's a screenshot. We did a lot. We did something which was worth 12,000 euro. Was just a high-level design. Anyway, new for zero. And I think I will skip or I will go a bit faster through this. New for Zero was a huge funded project in Germany, in northern Germany, with about 60 participants. And the main focus was flexibility, dealing with flexibility in the power system. Whenever there is a congestion, and there are congestions in Germany every day, and in Netherlands as well, you know. Actually everywhere, in Austria also nowadays. So wherever something is red here, there's a congestion in the distribution grid. Yeah, and in the classical way, for redispatch in Germany was the feed-in management. Yeah, so they were just stopped, they were curtailed, and then they get money for not producing, and that is highly inefficient. And what we were working on, like so many other projects, was developing a flexibility market where on a regional basis, participants could do something like load sharing or congestion management, which is driven by the DSO or by the TSO, and. And one example that I really like that we implemented is this one. And this falls into the category of load sharing. We have here two really huge industrial consumers. And by the way, there's also a third one. All of them at the port of Hamburg. There's also Aurubis, which is a copper producer. And Aurubis is even more extreme. When they ramp up their furnace, this is 70 megawatt up. Then the oven runs for maybe 15, 20, 25 minutes, and then it goes 70 megawatt down again. So the load curve of Hamburg is more or less usually like this, but actually it goes up like this, and then you have something like a chimney here, and another here, and another here, and it continues. And these are the Aurubis, the furnaces, when they are activated. And the same applies to us, ArcelorMittal as a steel producer. And the way how they work is they don't know when the start time is and when the end time is. So not at all they can align with the 15 minutes intervals of the energy sector. They just ignore that. Yeah. So they have to pay imbalance fees. And for them, this is cost of business, yeah, because they know that they cannot align with the 15 minutes intervals. So what we did here, we deviated from the 15 minutes. We deviated from the 15 minutes to 1 minute intervals in those days, so that we could be more precise. And what we did was that ArcelorMittal, for example, who have planned to start at 9:44, so they start later, and also the ramp down is again later. So for these slots, they put sell orders for the starting slot because they don't use the energy. They put sell orders on this flexibility marketplace, and then comes Trimate, the aluminium producer. And aluminium is easy. You have 25 melting pots, so to say, which always run. And they have a flexibility of 20 megawatts up and down, yeah, positive and negative flexibility. So they can execute this order and just take over the load. And this is what we have implemented. We have implemented the plumbing for that, the marketplace, and also the connectivity to the participants. And then they were very cautious. They didn't ramp up 20 megawatts. They just did it for 1 megawatt because they were so frightened about this technology that they wanted to do it in very small quantities. But they did it. So ArcelorMittal and Aurubis, they put this order on the chain. It was a decentralized marketplace, by the way. And they put it on the chain. Trimate grabbed this order. And they saved imbalance fee, so that was the gain for ArcelorMittal, and because the The fantasy for the pricing was quite limited, so they just gave it away for free. Yeah, so Trimed just got this megawatt hour, if you like, zero cost. And it was a win-win. The one didn't have to pay, the other got the energy for free. And that was done for the ramp up, for the delayed ramp up, and also for the delayed ramp down. So this is what I like most, because it was demoed, it was a field test, it ran, they applied that, and it worked. So what we developed, and now let me really skip this, was a decentralized marketplace, again, based on the same technology also of the EnerChain project. A trade was executed up there on the marketplace, and then it was activated at the SCADA level vis-a-vis the different industrial participants. That was cool. Yeah? It was 4 years of project, and after 3 years, we were ready to do this. Let me skip this. Oh, here are so many people from the Netherlands. No, let me speak about this. This is again about using a market mechanism to influence the trading in order to reduce the congestion in the grid. And if you hear this, you should think of GoPax, which is a brainchild of Tenet, Netherlands. And what we developed here is exactly the same like GoPax, what we did in parallel. The unfortunate situation is that no one knows PONTON and this, but Tenet has a much deeper pocket as far as marketing is concerned. So everyone looked at GoPax, and we came, the funny thing is, on eWorld 2018, both systems have been presented. We have implemented this. GoPax needed another year to implement, but after all, I think it also doesn't work so well. But anyway, so if we have a congestion here on the system, where the arrow is, there are some flows which result of trades which are good. These are the green ones. So if it is local on the left side, fine. If it is local on the right side, fine. If it is this direction, everything fine. This would even also reduce the congestion because it's against the congestion. This is bad. This would increase the congestion. Yeah. So and if we look at this from a TSO perspective, we want to influence the way how the trading behavior is. And we can influence that if we take the spread. And this is how GoPax work. This is how our system also worked. So here, for example, is a buy order. They want to buy 3.9 cents. And this is a guy in the area 111 here. And here's one wants to sell at 4 cents. And this is in the 142 area. And this looks good from a congestion perspective for the grid operator. So the DSO says speeding or someone says match, and then this flow materializes, it reduces the congestion a little bit, and it is because the DSO paid this tens of a cent per kilowatt hour, so that the higher the goal of congestion reduction is achieved. Yeah. So something that we also implemented. Yeah, and
Sorry, Michael, who
Yeah.
pays for this? You obviously have a positive congestion effect,
yeah,
but who is it financed?
yeah.
How is it
So
financed?
I would guess that this is paid by the user, by the grid users, and this is socialized through grid usage fees, as how's it called, at the beginning, the redispatch fee is also socialized. Yeah, the only achievement is that probably on this market-based, based on this market-oriented approach, it has more dynamics, and it only adds this little reduction of the spread, which is lower cost than Einspeisemanagement, feed-in tariffs. Yeah. So, but as far as I know, GoPax also has a market liquidity issue. So it's very difficult really also to ramp up such a system. Okay, now for something, what's the time actually? Okay,
3:05.
yeah, so I think I need another 15 minutes.
You're not bored, you just continue.
Okay.
What is great is that you are really telling stories from practice,
Well,
pilots that really are.
okay, so
Why is the market liquidity so low for gold packs?
I don't know.
Weather dependent or?
It's really difficult. You need enough participants to be connected. If they are not connected, you don't have the market depth. Maybe the spreads are too high, and it doesn't help to pay the spreads a little bit. It would be too expensive. I don't know. So it's GoPax has been outsourced by Tenex about 2 years ago, and they said, get along yourself. Here's a little budget. Try to market yourself and to and good luck. Yeah, so it's,
But doesn't it lead to lower redispatch fees? Yeah, because the redispatch is less.
yeah.
If you employ that technology, the redispatch will be less needed. So there will be less fees on that side.
Yeah, it's complex. I don't know really the answer. It's just what I think that might be the reason.
But is it, sorry to keep,
Yeah.
but is it only on the distribution level or is it also on the transmission level? Because a lot of the congestion is on the TSO level.
Yeah, I would also guess that the tenant as a TSO is also involved here. And I don't know the flows exactly in Holland. So as in Germany, the main congestion is from a north-south direction. I think in the Netherlands, it's similar typical congestions, which also involve the TSO. And if that is the case, I'm very sure that the TSOs also can be involved here. And indeed, if you look at the transactions on GoPax, I think it was even more than 90%, which were TSO-centric, and the rest was DSO-centric. So, but as I said, I'm not really looking at the system every day or yeah. Now for something completely different. So we were speaking here about TSOs at a very high level. This is about the absolutely low level. Here we speak about kilowatt hours between households. And that is the area where I would say thousands of startups have started over the past 10 years, and probably 990 have already ended over the past 10 years. And the idea here is to enable households to share energy. So there's the guy with the PV panel on the rooftop, and he wants to sell a kilowatt hour to his neighbor. So this is often very naively considered by startups because they just don't know all this plumbing in the background. They don't know all the role of the DSOs in this game. They don't know the role of the metering system operators. They don't know the role of the suppliers. So they just say, "Oh, wouldn't it be nice?" Blah blah, and if this could be shared. So we also did this. And we did this with Energie AG in Austria, in Linz, in Upper Austria to be precise. And that was live for 1.5 years, and it worked from the beginning to the end of the process. And this is what I'm going to explain to you. The idea was here a village in Upper Austria that was Neu der Krems. And people there, they received this app and to track how much was produced and how much was received. However, this was not in real time. The real-time project comes one later. This was just an accounting schema, if you like, or a settlement schema. So what happens? We have here a producer and a consumer. The producer has PV panels on the roof, the consumer's not. And the left guy wants to sell to the right guy. What happens is, first, the meter data needs to be measured. This usually takes place at night, and the data is delivered in the morning. This is how the metering system works in Austria. Then There's a little transformation going on and some additional blah blah, and then it's stored on the blockchain. The raw meter data. Then at a later point in time, the allocator is started, and the allocator looks at the aggregated production and the aggregated consumption. Maybe there are 10 producers and 25 consumers, and they all have some relations with each other. And based on these relations, per quarter hour, the fractions of kilowatt hours are calculated, which goes from one producer to one of the consumers. And after that is done, blah, 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 there are some additional processes. The billing takes place. And in Austria, the billing is based on measured data because they all have smart meters in Austria. So beginning of the next month, usually the supplier, being Energie AG, would send to the consumer a bill based on the 300 kilowatt hours that that consumer has consumed in the previous month. Now, out of these 300 kilowatt hours, Energie AG only bills 250 kilowatt hours based on their tariff, and the remaining 30 kilowatt hours are received within this energy community. So there's a list of itemized little fractions of kilowatt hours with the individual prices summing up to some amount, and that is then sent to the consumer. And opposite, the producer gets a payment from the supplier for the excess power that was consumed in the energy community. I think that's it. Anything more? Yeah, and of course you can take a look at that using your app. So from the very beginning, when the data was metered, to the very end, when it was billed to the people, it ran through the ISU system, through the SAP system of the supplier, and it was true euros being paid out to the producers and being billed to the consumers. So this really worked for 1.5 hours of a field test, and even more. The participants could be very flexible in setting up power groups, Stromgruppen, as it was called. And so Hans, for example, he is a producer. He has solar panels on his rooftop. And then there's Horst, his father, 3 houses away in the neighborhood, and he would be supplied by Hans. And then there's also, and that group is called Hans Family. So Hans could create a power group, and he could invite Horst to be his to be supplied consumer. And Hans, as the owner of the power group, just defined that the price for energy is 0 because it's his family. He wants to give away the energy for free within this group. And then there's also Helga, the daughter, another 6 houses away. So they get the energy for free. And then there are these guys here. It's another. So they call themselves the Sonnenfreund, the friends of the sun. And here we also have Wilhelm and Helmut as producers and some more as consumers. And the interesting thing is, you could also participate in more than one group. So Hans prioritized his family highest. So his first chunk of excess power was delivered to his family. But if there's still some excess available, it went to the Sonnenfreund at 8 cents per kilowatt hour. So you could, I think, up to 5. You could define or join up to 5 power groups where you participate, and you can imagine that the job of the allocator is quite tedious. Yeah? And we speak really of very small fractions of energy, which per quarter hour go further back between them. So, and then over time, there were even donation groups. Yeah, then the kindergarten created a group and invited the producer Hans and the others to join, so that even at priority 3, again, energy was donated, which was not consumed by the Sonnenfreunde. So energy was allocated to the kindergarten, and also the Feuerwehr, the firefighters participated in that. This worked. There were power groups exactly like this, and it all worked. But now comes the but. You don't need blockchain for this. You can also do this just by those guys where the SAP system is running, where the metering system is running, and at Energie AG. And so that was the first energy community in Austria which was live. And then the legislation in Austria, we speak about 2018, 2019. And then in 2021, the law was adjusted. There was the ELVG in its version of 2021, which implemented the RED II directive of the European Commission, and also the Clean Energy Package of 2019. And from that day on, energy communities skyrocketed in Austria. I know this because our client, EDA, is the organization which registers the application for energy communities. And for 3 years now, or maybe 2.5 years, they have 200 to 400 registrations of energy communities per month. So they have already around 10,000 energy communities. And there are energy communities which each have 15,000 participants. So, for example, in Burgenland, in the eastmost Bundesland of Austria, there is an energy community with 15,000 participants. They indeed call themselves something like Freunde Friends of Burgenland. And this is business in Austria. This is regulatorily, they created a level playing field and an incentivization that led this business of energy communities extremely proliferate in Austria. And I can only say congratulations, Austria. They did that right. I know also in Netherlands, energy communities are proliferating, and also in Spain. And I can also give you interesting business cases and business models which are practiced in Spain, for example. But this is really fascinating. It's fascinating if you're an energy guy, but as I said, this is not really a blockchain case. Yeah? But we are speaking here blockchain and energy, and sometimes more about energy and less blockchain, and so on and so on. So now for something, now comes my third last, and this is ET block, and we are here at Siemens. So there was a parallel project also by Siemens, which was organized in Ried in Bayern, in Bavaria. ET block was a real-time energy trading project. And let me just spin this because I know time is running. What's the idea here? Again, we have the producers and we have the consumers. The producers produce for their self-consumption, for the local consumption within the group, and they also produce a part of their production which is not absorbed by the group. And that applies to everyone who produces. And we also have consumers. So this pink part is traded locally. So we have the same quantity of 9 kilowatt for a 15 minutes interval, which is produced on the left side and consumed on the right side. And that is also an energy group, but the delivery period is the next 15 minutes interval. So this is real time. And then there's the residual load provider. Could be an aggregator, could be the supplier, could be a third party, could be a business. Yeah. And this guy pays 3 cents if he absorbs the excess production, and he asks for 10 cents if he sells to the consumer side. So the margin is the part in between. And the interesting thing here is the residual load provider could dynamically adjust the prices so that the likelihood that people produce more or less or consume more or less can be influenced just by the pricing, so that this area, if this is a local grid, may turn to a more net producer or net consumer, so reduce or increase their production share within the entire grid topology, and therefore also be grid supportive in their behavior and help mitigate congestions. So, and that was also based on blockchain, and that was also exciting. That was less live when we demoed that. It was more an internal demonstrator together with Fraunhofer in Germany and some other participants. But the principle was interesting. But we could also replace this by a central coordinator, and then it's also without blockchain, if you like. However, that was another project, and now I come back to the positive cases again. There is a trading site called Bearing X for ball bearings, something completely different. We're even outside the energy sector. Yeah? Ball bearings are these things which you have in your bicycle or in your car, wherever a wheel turns, or a bridge flips up and down. And this is a huge market. It's a $50 billion market worldwide. And these traders, they are scattered around the world. It's hundreds of traders. They don't know each other. They don't trust each other. There's no trust. Very important. And so there's often the requirement to have an exchange for ball bearings, yeah, so that people have more price transparency and more competition, yeah. But it doesn't work because the ball bearing traders, they say, if there is a central exchange, there is a third party rule who knows everything, who asks how much for what. And that third party rule will then for sure run to one of the participants and try to sell this information. This is how they think. This is their mentality. This is a trust, an untrusted space, if you like, yeah. Maybe I'm exaggerating that now, but this is the tendency here. And so someone out of this space approached me when we did the Enerchain project and said, what we are doing in energy trading could be very interesting for my business. And indeed, we did that. And what we built was a decentralized exchange for ball bearings. So the nodes were hosted by the market participants. That was the good old Enerchain idea. And there was no exchange in the middle. By the way, an exchange was built and it didn't work. It didn't work because of this non-trust situation. So Bearing X has now about 50 to 60 participants. This is not all of the traders worldwide, but it's a growing number. It is decentralized and it is in use. So they put all their stock data that they have with the prices as orders on the marketplace every morning. The orders live for 24 hours and then they are replaced by again the new orders. And in principle, it works. We only found out that the blockchain technology that we used was too slow, but hey, we replaced that with Kafka, another decentralization technology. And if you just look at it from a distance, it's still like a blockchain. By the way, Hyperledger from IBM is also based on Kafka. They also call it a blockchain technology. So by using Kafka, we still have a decentralized system. The principle still exists. This was just for performance reasons replaced by Kafka. But as you can imagine, they were not used to trading. Now they use it for trading. Now they turn into traders. And suddenly people ask, can we do this a bit more efficient? can we use a centralized system here? And so a decentralized system was used to address the untrusted situation. Then there was a change of culture, if you like, in the community. They turned into people like energy traders, And now they are asking for their ePay spot or for their broker platform or for their whatever in order to do it that way. But it's still running in a decentralized way, and it will probably still run for a couple of years until maybe this change has materialized.
These are amazing examples. So first of all, thank you so much. So this is more on the trading. So or the execution side. There's no settlement. No. This is mainly trading activities, peer to peer.
Yes. So it is a platform. It has its own screen. It's like an exchange, but it is a decentralized execution of trades. It is a broker platform because after the execution has been done, buyer and seller know each other. Like if you use Merz or one of the classical broker platforms, and then they get along bilaterally. It requires some standards. So specifically here we have the physical part of the system. So how's the delivery? The work needs to be separated into regions so that the cost of shipping can be calculated and. But it's a decentralized platform indeed for industrial goods. Yeah. So very nice project. We started that in 2018. It went live in March 2020. March 2020 was exactly the month where
Everything stopped.
the world stopped, and also the world of ball bearings stopped. So they had 2 hard years of Corona, and then they recovered from this phase, like others recovered from Corona, and but now it's really expanding. So now comes I think I have now 3 more projects, and these all deal with certificates. To come back to the original topic. Let me skip the first one. There was this typical hitman project, but HortiCert. HortiCert is about peat and saving peat. Yeah, for CO2 reduction reasons, it's now known that peat should remain in the earth because it's a sink for CO2. And if you have a nice garden, you would have used peat to fertilize it. But there are also peat replacement products like cocos fibers, for example, or parts of trees and such things, which are replacement products. And the point is, let me skip this. The point is that we have a supply chain here. So here, for example, is the first gatherer who collects the cocos fiber from farmers, yeah, and quantifies that. And he sends that to a central warehouse, let's say on Mauritius, where I just spent my holidays with the family. And then this is shipped, and here it's processed somewhere in Spain. And then it's shipped again, and then it is at the end it goes here to a retail store like Obi or how they are called in the world. And the point is, in every step there is an additional CO2 footprint which is related to this transaction. So the original has a CO2 footprint, but then things are shipped, things are stored, shipped again, processed. So whatever is done, some CO2 is emitted, and this registry here is a central registry which keeps track of the aggregated CO2 footprint. And in order to do so, it needs to receive this data, this additional CO2 which is produced in addition, so that here in the retail store, the consumer can use a QR code and scan it and knows, okay, this bunch of this 50 kilo sack of fertilizer this has a CO2 footprint of I don't know, 200 kilogram per ton or something like that. So the problem is they don't trust this guy here, because the most sacred or the biggest secret in business and alongside the supply chain is for a supplier who is your customer, and for the customer who is your supplier. Knowing your supplier is something you would not really share with the rest of the world, and also not with the operator of this. So it's similar to the ball bearing example. Yeah? So what can we do? And of course, there are registries like this, but they are very cautious to use that. And this doesn't, of course, only apply for the peat replacement supply chain. It applies to every supply chain. So they don't trust this guy. They don't want to share this information. So the business requirement here is, can we build a system which does this job and which provides this aggregated CO2 footprint report without knowing who is reporting to whom? And this is what we've implemented with EnerChain, because on EnerChain, the trading was also anonymous, but it was in a decentralized way. And when we jointly designed the system, they told me, yeah, actually, we would like to use blockchain, but we are not quite sure. Maybe it also works in a different way. And then the result, let me skip this. And then the result was building a system which picks features from blockchain technology, but implements them in a central way. That is, so the blockchain people, of course, would kill me for doing such things, but it's practical. So what happens here? This is the guy, this is the supplier, and this is the client of the supplier. And the supplier wants to send a message to the client, and this message is routed through this central hub. And at the same time, the central hub should not know that they communicate with each other. A part of the data, the CO2 footprint, should be readable for the central one, otherwise he couldn't do his calculation. But the identities of the two should be hidden. And how is that achieved? Well, this is again a bit of public key cryptography. Very simply said, this guy sends a message which only this receiver can decrypt, and only this one, no other. But all of them don't know for a given message, like this T1 transaction, and no one of them knows if they are the intended receiver. So this message is uploaded to the portal, and of course the operator knows that this guy up there has sent a message. Yeah, and then everyone who participates downloads this message. You see already scalability is limited, but for this purpose it's good enough. So everyone downloads this message, and everyone tries to decrypt the message. Only this guy with the green box here is able to do so. The others try and they don't succeed. This guy sees all four of them downloading this message, so he doesn't know who is the intended receiver. And this is blockchain technology as we used it, as we applied it in the years before for other purposes. And he processed the data, and he said, so we have after all, a communication from participant A to participant 4, or from any to anyone else. They all are registered participants. The guy in the middle knows all of them, but the flow is anonymized. And I also talked to people in the medical sector, where also some medical research is done, where the flow of communication should not be disclosed to the man in the middle, if you like. And they are also very interested in this. And well, this is a technology which is, yes, centralized, but which is composed out of centralized and decentralized elements. And yeah, and this is what I meant at the beginning. Start with the business requirement, then look at the tool set and pick what makes sense. Yeah. So, but now what's the time? Oh, okay, give me 7, 8 minutes. Now comes stuff. Who was the soft guy? Yes. So our client, ISCC from Cologne in Germany, asked us to build a SAF registry. Again, also to do something like it's to build a registry which allows to supplies of SAF into the system and claim them by airlines. And then the airlines may transfer that to clients of the airlines. So for example, McKinsey has a policy that for all the flights that McKinsey consultants do, they buy credits on a platform like this. And to manage that, this registry was built. And by the way, this is a centralized system. We are here at Siemens again. It was built using Mendix. Mendix is a low-code system. Low-code system doesn't require any software development programming anymore. You just compose a system. But sometimes it's helpful to have a software developer doing the composition. That's more efficient than someone who has no IT background. So we developed this based on the Mendix system. And yeah, what happens is that SAF quantities which are delivered to Airport 1 could be San Francisco, based on the fried fat from McDonald's or others, that they are put into the registry. So the number of credits is increased, and then others at other ends of the world they may book against that and buy these credits. As I said, airlines or clients of the airlines, and then once the flight is done, the credits are retired again out of the system. Yeah, so if there's really more interest, we may also have a session with my colleagues who are working on this. And
So is this live? Is this live, Michael?
Yes, that's live. You can go here on this link and see it there. And then another one is Climate Pal.
But maybe you, before you go on to the last one, maybe go back one.
Yeah.
Fine. So what's the technical underlying for this?
As I said, it's the Mendix system. It's a platform that you can use to simplify the software development process. Low code is the keyword here. And what is also dramatically reduced as far as the effort is concerned is to deploy this. So they have their Mendix cloud. And if you have designed your system and want to see it live out there in the internet for the first time, you just press a button. And then you have an instance in this Mendix cloud. And after some time, you can access it. If you want to do this as a software developer and as a DevOps, you have to work a couple of days until this build pipeline is available. Yeah, so it's still a tedious job, and with this system, all this tedious detail work is skipped.
It's a little bit more on this use case, because it says market on the top. So are the transactions happening on the of these certificates?
No, it's a registry. It's
Pure registry.
yeah, exactly.
Okay.
Yeah.
So the transaction will be then OTC.
I think so. So it's not a regulated market like an exchange. It's
Retirement, so the retirement then happens, through a request to the registry for retirement. Retirement of money, that is.
yeah. Well, I must admit I'm not so much into this regulatory space. So I think this is more under the regime of the UN. And also the standardization here is quite complex because it's a global one.
ICI, the IATA, ICAO, ICAO.
Yeah, I have this acronym before, yeah. So that is one of the Mendix-based registries, and then there's another one, Climate Pal. This is a platform for offsetting projects. You have heard last year, Vera, yeah, they are not really standing in a good light as far as Vera is concerned, because it was found out that 90% of the projects who claimed to do some CO2 reductions didn't really do so, or didn't as much as they claimed. So this is a new one. This started in 2023, and this is based, I think I should also say that ISCC, our client, is a trusted third party in the sense that they develop certification schemas themselves, yeah, specifically for sustainability certification, and they do that already for at least 20 years. Those who certify, like Bureau Veritas or TÜV or whoever acts as an auditor, they apply the schema which has been developed by ICC. ICC has a very trustworthy standing in this area, and their clients ask them, could you please set up a platform like this? Because we would expect that this is more trusted than free-flying platforms, where it has proven that they don't really work. Yeah? So what we developed here is, as I said, an offsetting platform where projects, where you can see projects that are registered, that are supported in their description of their project, and once they have passed all the different certification levels, they can be they contribute also credits which can then be used by others in order to compensate their CO2 emission. Anything which I missed? Yeah, it's operated by us, but actually also based on the Mendix platform. So same software development approach that we also applied for the SAP platform. And that's it. I think my last slide, or second last slide, and then we have gone through everything. So I just wanted to point out, I was mainly speaking about B2B use cases. It's clear for me that cryptocurrency use cases are much more successful. And when we speak about decentralized finance, there are also many working use cases in those spaces. If you want to do if you consider blockchain, as I said, I think it's important first to consider if there's a trusted third party. If that is the case, then don't use blockchain. Very simple. Yeah. So and check if it could also be built in a centralized way. Well, for some reasons, and think of the biogas example, and think of the ball bearing example. There are good reasons to do it in a decentralized way, because trust is not given, or the political situation favors a decentralized approach. Then fair enough. Then blockchain makes sense, and as we did it here. as I said, I would be the happiest guy in the world if there's a B2B blockchain use case. But it's really a problem that needs to be found. But I'm sure this case exists. Yeah, still seeking. And then what applies to software engineering in general also should also apply to software engineering around blockchain. Yeah. First, look at the requirements. What do people really want? What is needed? What are the business requirements? And what are the use cases? Very classically. And then look at the technological options, how to fulfill this. And if their blockchain makes sense, fine. Yeah. Then we have a blockchain-based use case. And two more opinions. Tokenization of energy. This is something I from time to time I heard. There was also a guy working for Alpic some years ago. He wanted to develop a schema that tokenizes the entire energy production in Europe, so that every kilowatt hour or megawatt hour is somehow represented on chain, and so that you could keep track of the production and the consumption and do all that through blockchain. That can be done. It would probably also help to make the system more transparent. And data which is shared between the trading side and the grid operator side, so for example through nominations, could be derived from this huge storage where all this data is kept. But it's a big project, and so far it has failed. It was a very strong vision, let's say. Yeah. So I'm not sure if this is a too large of a vision. And then there's also what I also hear from time to time is use energy like a currency or as a currency, which means that I have something here, a token which represents a megawatt hour, and I can use this to exchange it against something else, to sell it or to trade it somehow. And I think this is interesting, but I think the volatility of the megawatt hour price is just too high. Yeah. So it depends on the context. If it is, if we look at the forward market, this might be quite stable. But what if I buy a megawatt hour and tokenize it, and I paid 80 euros for that, and then comes the spot market, and from a quarter hour to a quarter hour, the price jumps by 20 or 50%, or the price range is between minus 100 and plus 900 euro, as we see it frequently on the spot market. So what is the value then of this token that I have? Yeah. So this is also quite visionary, and yeah. And whenever there is, I've seen many ICO descriptions and white papers for projects, and when you read these white papers and see terms like central or custodian or coordinator or whatever, you can read it bank or third party and be careful, yeah, because then obviously wanted or not wanted by using this language, something quite centralized is actually described in the white paper for a blockchain ICO or SDO or however it's called. So it's not easy to find the blockchain use case. And the more of these words pop up, the more likely that this is not a blockchain use case. So, as I said, I worked like a blockchain hitman for companies who asked me to help them to find out if they should participate in a blockchain standardization project, because the others are also participating. One example was in the logistics sector, where pallets were exchanged between Aldi and Rewe and all these supermarket chains on the one side and the logistics service providers on the other side. And it is intuitive to say, okay, why not treating a pallet by a digital or adding a digital twin to each pallet, which is a token on the chain. And if we want to reshuffle the pallets in such a way that it's minimized cost to allocate them to the different players in the market, then we only need to do this on the token level. But if you zoom into that project, then you find some gaps and some issues. And if you ask the people, if you put your finger into this wound and ask them, how do you want to solve this? And then you get an answer like, yeah, we are not quite sure, but we will do that during the implementation phase. Yeah. So that guy or that quite huge supermarket chain did not participate in that. Yeah, because I could give them proof that this doesn't make sense. On the other side, I would be also happy to evaluate blockchain visions the positive way. This could also be the case. Yeah. So what would be a very happy job. But I'm always a skeptic guy as far as that is concerned, because as you could have seen, as far as energy is concerned, I know the application side, the sector, and I also know the technology side. And you remember our PONTON shape, yeah, with the grids and the markets and power in the middle. So I also feel like being in the middle between the entire energy sector and technology. And in that sense, I'm happy to see what's going on in the next years. Maybe there's new technology, maybe things are done in a better way, and maybe I find myself in a situation like 2011, where eCash failed some years ago, but then magically someone has invented something where one said, wow, that is the solution. So no one expected that, but one really bright guy in the world has found a solution which opens up completely new possibilities. I'm looking forward to that moment, but I have now come to the end of my presentation. It was a bit longer than planned.
It was great.
Yeah.
Really great, I have to say, very much educational and dense. I think you are going into a lot of different things here. But there may be no questions also and comments. We have more than 28 people remotely. So yeah, Paul, you're the first one.
Yeah, thank you very much. And I know Michael already, also like Jan, more than 20 years, and always good to hear where are the problems in the implementation. The devil is in the detail. Because we talk a lot about energy systems and about energy markets and about information systems at high abstraction level, and there actually everything is possible. And people talk about blockchain as if that's a solution for all problems on Earth. But if you really look and work on it, and that we have done several times, to see how difficult it is to make it work. And also, what you very often you see in most of your examples, that if people are pleading for more decentralization and they implement it, then they also see that also decentralization has disadvantages. And then they move or have a tendency to move back to centralization. If they arrive at centralized solutions, then they have the same feeling that decentralized would be better. There's a sort of equilibrium that you find your way in. And another observation, like I said before, is very important, that there are a lot of solutions. There are more solutions nowadays on blockchain that offer much more advantages or solutions than 10, 15 years ago. But also they are not offering like the real ideal solution. Actually, in PII and ZETA, as you know, we also are now connecting to CASPA Industrial Initiative, where this CASPA actually is a blockchain 2.0, at least that's what it claims. It is like, it's Bitcoin 2.0. It claims decentralization, it claims proof of work, scalability, security, and also free of influences by third parties. A lot of the problems that you were describing seems to be solvable through this new CASPA, this Bitcoin 2.0. That's something we have to work on to look like if this is true. Unfortunately, you have invited Rory, who is the big promoter of CASPA. He wanted to be here today, but he cannot be here. But he's listening, he told me. He wrote me that he's listening. He was listening to your presentation. Rory is proposing a stable coin. It is not, a stable coin is not, as you say here, suggest here, linked to a megawatt hour that changes all the time, but more to a LCOE, like a standard or an average in the market, which is very stable because the LCOE of a certain production situation with renewables is very stable. And that could be a solution. But there are a lot of tokenization as well. The tokenization of each kilowatt hour that's produced worldwide will not make much sense. But there will be there is a tendency to go a little bit in that direction. So I want also to invite you to be more involved in the discussion that we have in KII, the CASPA industry, and also the connection to ZETA, to bring it into the market. Like also Mo is telling about the carbon registration and also the green certificate registration, not only in the region here, but worldwide. That's from my side. It's not much in question. Yeah, a question to be more involved.
But maybe Rory is on line. He can comment.
Are there any questions?
Can that open it? Are there any questions? I mean, I suggest anyone from the group. Door is open now.
Yeah, maybe just to respond quickly. I had CASPA. I like it because it's evolution versus Bitcoin. It shows this attitude of using a toolbox and picking the good parts together. So just one example, it took a little bit pattern from IOTA, but not on a transaction basis. It's more on a block basis, and that makes that helps increase the parallelism and the efficiency of the system. I had a look also at the white paper for the stablecoin based not only on the US dollar but also on many BRICS and commodity-based alternatives. That looks also interesting, and I'm also interested in discussing that. I only had a very quick look yesterday in the evening, as it was sent out at that time. Yeah, so with pleasure, and maybe there are more questions. You have?
I asked Rory to say something, but I'm not sure whether he's.
Some lunch at the same time.
No, guys. Hi, guys. I'm actually here.
Anyone would like to ask?
So, just to go back on the subject of SAF, there is a very interesting use case, and that is the fragmentation of a certificate coming from a SAF application. So rather than a person buying a complete SAF application certificate, ultimate buyer could be buying 1.5, 1.75, depending on the actual emissions for which they want to utilize the certificate. So I'm personally working on a project relevant to that. And it's with the three of the global freight forwarders, the three largest, fourth largest. And I think that would be something that that we can look into together. And how can that, in that case, it's going to be a trust issue because the ultimate user wants to also ensure that the same certificate is not going to be sold twice.
Yeah.
And the same certificate is broken into pieces that would sum up to one. So that could be something that we could discuss. And I think there could be a very interesting use case on how we can leave that unregistered itself. Since you're also operating the registry in that issue. The same application is also applicable for marine. Because users are also suffering from a similar pain. That is fractionation of that certificate for use.
Hi guys, this is Rory here. I don't know if you can hear me.
The region here. Decentralized solutions, maybe just that we're all defined here. Region where fishing was the main business only 100 years ago. So maybe there is that law that could be found simply due to the fact that there's specific circumstances here. There is governments that have only a limited cooperation and cooperate but limited. And there is also a different currencies that could be sort of managed by such technology. So different from the Eurozone where there's one currency for a number of countries and transactions can be quoted in that currency. Here, it would only be possible to use the US dollar as a reference currency for these transactions or provide for a different coin. So there is a use case, I believe, that could be developed here based on the experience that has been made. Not just theoretically possible, but could be put into practice, provided that obviously there is support for it. Frankly speaking, I don't really know how otherwise the carbon markets could emerge here, because the countries in themselves are too small to have a carbon market themselves. This carbon market would not go anywhere because of the lack of counterparts in these areas and smaller states in the region. In reality, it could only work in terms of regional marketplace that could be developed here, where maybe a decentralized solution is the one we've been finding friends are the ones who actually need to authorize the use of it. So far, I think I find that your presentation highly educational, instrumental also, maybe requiring also some follow-up. Now, is there any more comments here from the room? Frank, you? No?
Can you hear us?
Yes, we can hear you perfectly.
Perfect. Rory, you can go ahead and ask your question. I think they can hear us,
No, I just wanted to echo the experience that was shared in building these peer-to-peer type energy trading projects. Almost all of them have failed, and very few of them have been able to scale for various reasons before you even get to the regulatory aspects. And there's still many of these projects being proposed today. They think you can just add blockchain onto something and it just will magically create these brand new markets, and that's something that I think people just need to realize more. And it was just useful and very helpful for those descriptions. So I'd like to thank for that. Paul touched upon a paper that we have a working version of that's continually upgoing updates. We did a test proof of concept on another chain outside of Casper recently, just to test some of the concepts of it, which was an energy-based stable coin, which we call Gigawatt Coin, and effectively the last slide of the presentation showed the whole idea of an energy-based coin, a kilowatt hour or a megawatt hour coin, and these are great concepts, but in exactly the same way that Bitcoin and other cryptocurrencies, of which there's very few. I think it's important to differentiate that there is a difference between a cryptocurrency, of which there are actually very few, and then crypto tokens, of which there are many, and most are just complete junk. But let's leave that aside for another day. But in terms of actually using most of these instruments, even if they're on blockchain, they tend to be very volatile. So you don't want to use Bitcoin for transacting value, because it's a 24-hour continuously traded market and very, very volatile. So what we wanted to do was take the best bits of Bitcoin and blockchain assets themselves, put it onto an extremely fast blockchain that has all of the same security, decentralization, but with scalability characteristics, and create a stable coin for transactions, so that you could transact very large volumes that are fully collateralized but remain stable in value, and potentially are deflationary over a long period of time. And so the draft paper that we've put out just the initial section. The annexes run to 200 or 300 pages, because there's all sorts of algorithms and codes and everything else associated with it. But the idea is that it would be backed by a combination of fiat, i.e. cash or cash equivalents, renewable energy credits or carbon credits, which would effectively lock them away from the market and assist in the financial instrument becoming carbon neutral, or indeed carbon negative. And that would also help improve the collateralization of the stable instrument, and then adding in tokenized infrastructure. So rather than tokenized energy, we tokenize the infrastructure itself. So that opens up whole new, or we tokenize, for example, green bonds or other interest-bearing assets. But we use that to back the stable coin, or indeed potentially add in commodity or energy ETFs even as backing to the stable coin. So the whole idea is to make it as stable and potentially deflationary as possible. So that was just something that I just wanted to follow up just on what Paul had mentioned. And then the base layer crypto that we're talking about is an evolution of Bitcoin. It's called Caspa. It's a proof of work coin, which is different to the internet, which is based on proof of authority. So there's all these different proofs of stake and everything else. Proof of authority, unfortunately, sacrifices security for speed. But Caspa is the core developers come from doing all of the original security work, and most of their papers are the foundations for most of the other cryptocurrencies, like Ethereum, for example. They're heavily referenced, but it's the first that solves the trilemma, which no other cryptocurrency has been able to do. So you can either have three corners of the triangle: full decentralization, security, or scalability. And usually all of the other cryptocurrencies fail this trilemma test, except for this Caspa. And it's based on proof of work, which means that the underlying crypto coin or cryptocurrency actually has an intrinsic value because it's based on energy, and then the network itself is secured by energy. So we think these are quite important attributes. And then in terms of speed, we're on the test net. We're at 10 blocks per second, which gives sub-second speed. So we're at 100 millisecond speeds, which is what you need in terms of trading energy. So we think it's a very interesting technology to pursue, and quite revolutionary in many respects, and highly scalable. And also very, very censorship resistant. So, one of the things that we've been considering when it comes to energy is that you want to have some degree of censorship resistance, particularly if you're building something for a specific market like MENA. You don't want to have any one entity or country or anything else having undue influence over a particular project or technology, or to artificially induce sanctions or whatever else. You want to be able to rise above and sit above all of that. So censorship resistance was also something that we think is quite important going forward when building these things out. And then something else that we've been thinking about in terms of the carbon market is how could we build upon this high performance blockchain, and create a very simple system in terms of how carbon credits are created, verified, and traded. And there's a lot of technology which I'm not going to go into any detail on, but it's called zero knowledge proofs, trusted data oracles, and automatic data validation, which effectively is a protocol that creates a mathematically unbreakable chain of trust from the initial carbon reduction measurement through to the credit retirement. And in the next few weeks, we'll publish a presentation or a paper on that. And I think it would be interesting just to have the community's view back on that. And the whole idea is to eliminate middlemen as much as possible, and to make things as smart as possible. So that a digital smart contract can handle everything from project verification to credit issuance, public auditing, and make those digital assets available to the traditional banking system, so that they can be tagged using certain ISO standards, and then can be custodied by non-industry players such as other people in the banking system. So that's just a little bit of an update, and just to follow on from some of the comments that Paul made from what we're doing with KAI and this Caspa technology.
good to see that things are moving. And technology is a key role, has a key role in the transition that needs to happen, not only here, but worldwide. Now, I think if there are no further comments or questions, I'd like to close this workshop. Thank you very much, Michael, for your presentation. It was great. Hopefully we can also post this so it's publicly available, and we're looking forward to have our next workshop about 2 to 3 months from now. So we're organizing 4 workshops per year. And on behalf of ZETA, I wanted to thank you for this and wish you further continuation of all that revolution that you are driving across the line. Thank you.
Thanks, guys.
Thank you for joining online.